Mining Network's coverage of PDAC is brought to you by Tudor Gold.
Hello, welcome back. We're at PDAC and I'm with Jeff Christian, the managing partner at CPM Group. Jeff, good to be with you again.
It's good to be with you again, Peter.
Look, quite a while since we've actually had a catch up, so quite timely that we're able to do this. And obviously we're just hearing in the news now that the tariffs are back on. Mexico, Canada, beware, 25% come in tonight. What are you making of this?
Well, the tariffs are on. They weren't back on because they weren't there. You know, there's been great confusion inspired by the administration because they've been all over the board as to what they're going to do. And even now, you know, they've said, yes, the tariffs are effective tomorrow, but it's not quite clear if it's on everything. And it's not quite clear if it's everything of origin in Mexico or if it's everything that's coming directly from Mexico and Canada. So there's a big question, like does it include gold and silver? Does it include refined gold and silver? Does it include gold and silver that's contained in concentrates or doré? It's not there. If gold and silver have gone from Mexico to London and then comes to the United States, is there a tariff on that? Because it's an import from London, not from Mexico. Yeah. So there's a lot of uncertainty still about what those mean. The big issue in our mind has nothing to do with whether or not the tariffs have to do with gold and silver. It's that the last time the U.S. government did this was in 1929 under the Smoot-Hawley Tariff Act, and it led to a 67% decline in industrial activity in the United States over 3 years.
Blimey. Okay. Do you see this any different though? I was talking about this on the channel earlier. We're starting to see large investments from groups like SoftBank, Apple have committed to come back and create a lot of jobs in the US. It's very Trump's sort of game plan. It seems like is if you're not making it in the US, then you're going to get hit. Is that incentive enough for people to continue industrial?
That's what he's saying, but again, you know, there's a great deal of uncertainty as to what exactly the implementation will look like.
Yeah.
I will say this, yeah, you have a number of companies that are reintroducing manufacturing in the United States, but a lot of other companies are not. And if you look at the industrial production figures for January and in December, the overall industrial production of consumer goods and other types of manufactured products were up in both December and January, but business equipment has fallen in the last 2 months and fallen sharply in the last 2 months. That tells you that there are a lot of companies that are not publicizing that they're resourcing production in the United States. They are saying, given the economic and political uncertainties, I'm not investing. I am not buying equipment. I'm not building factories. I'm not hiring people. And that ties in with that whole issue. The bigger concern about tariffs and other policies that have been announced is that you might look at a very deep recession in the United States and on a global basis as a result of these things. If you get rid of $1 trillion of government spending, you've just knocked 4 to 5% off of U.S. GDP.
Yeah,
that's a big recession. You know, so a lot of companies, you know, there are those companies that are kowtowing to Trump and caving into his mafia-like policies and such, and saying, yeah, we're going to resource, we're going to build a factory here or there, and a lot of them actually had already been planning to do that because of real economic incentives to do that. But they can get some political hay out of saying, oh, we're doing it now, and publicizing it. But the reality is that overall, businesses in the United States are preparing for a recession.
It's not the case that, obviously, the way that things were being run in the US, it felt like it couldn't really go on with levels of inflation, the amount, the debt trap that they were in. Is this not just a case of you're going to have to knock it down and rebuild, and this is part of that process?
There is, in the United States, this quasi-Puritan thing, this can only be resolved by fire. And it's nonsense, right? So Yeah, things were unsustainable. Inflation actually, it spiked after COVID,
Yep.
and it was coming down. It had spiked up to 9%. There was never a hyperinflation. There was never the 14% inflation that we saw in 1979. It spiked up to 9%, and it was back down to about 2.5 to 3%, and now it's starting to rise again, right? So inflation was something of an issue, but the real issue was fiscal deficit spending and growing debt. And I wrote a piece, I think it was in 2009, and then it was republished by others during the Occupy Wall Street thing. And it was called 5 Easy Pieces. And it was 5 pieces of government legislation that could have gotten rid of what was then a $1.7 trillion, $1.4 trillion deficit, and actually possibly generate a surplus.
Yeah.
And it was stuff that was not particularly painful to 99% of the population. And it's funny because people will call me. I've had people call me in 2024 saying, "Hey Jeff, can I get a copy of that 5 Easy Pieces?" And we've actually extended it. We added a 6th. The deficits are much bigger now. The debt's much bigger. This could have been resolved by responsible fiscal policies on the part of the White House and the Congress. But these guys have not shown any desire for fiscal responsibility. So the Puritans are saying it has to be resolved by fire. Unfortunately, the people who are lighting the fires don't know what they're doing. And they're burning down Palisades Heights when they really wanted to just clear the brush.
Okay, in terms of, obviously we are a bit further along now from 2009 in terms of the debt and the difference. It's what are those 6 things that could be done?
Oh, God, asking me late at night. One of the things was to reduce defense spending. And you have to understand, in the 1950s, the U.S. Defense Department, working with defense contractors, said, we want every congressional district to have either a military installation or a defense manufacturing contractor, or both, because we want every congressperson to be beholden to the defense industry, the military industrial complex, for jobs. And that has been a problem. But the reality is we have the largest military in the world. Our military today is stronger than all the other militaries combined throughout history. And people say, well, the Chinese are outspending us. Yeah, but they're coming from a position 80 years behind us. And if you look, they have more destroyers than we do. Their destroyers are literal. They can now go into the waters close to Australia and New Zealand, as we saw last week, but they can't cross the ocean and attack the United States. The U.S. has 2 or 3 carrier groups, and each carrier group has 25 to 30, 35 warships and support ships with it. So the U.S. has 2 or 3 carrier groups surrounding China right now. We have more firepower in the waters off China than China has. We have a military budget that could be slashed, and slashed heavily. That's one thing. Another thing is raise the marginal tax rate on the top 1%. You slash $400 billion off of the deficit right there. Another thing is to say that the Social Security tax applies to your first $400,000 of income instead of your first $140,000. That only affects fewer than 5% of taxpayers, because fewer than 5% taxpayers earn more than $140,000. So it only affects them. And quite frankly, if you're earning $400,000 and all of a sudden you have to pay Social Security, you can probably, it's not hurting you because you're not paying Social Security, you're investing in your retirement account. If you increase the Social Security deduction that the companies pay by 0.5%, Social Security is liquid for the next 72 years. So those are just 4 of the things, and there are other things too.
I think the only thing I would say about that, I think in the US, it would be political suicide to suggest that you should reduce defense spending. I think in the world that we're living in today, I just
don't know
couldn't
that
see
it is. I mean, I think it's less, okay, here's a hypothetical situation. A politician says, let's slash defense spending from $800 billion to $400 billion, which is more than we ever spent on defense prior to probably 10, 15 years ago. Okay? The other guy says, hey, no, let's stop working on cyber warfare with Russia. Let's give Russia Ukraine. Let's tell Russia you can do whatever you want with Western Europe. Which one is going to be seen as the more odious anti-defense, anti-military person? Let's be honest. You know, I think most people sitting in their home watching the news would say, okay, that's a sensible thing to slash defense spending back to pre-imperial war periods. That's what it is. I mean, if you look, when we attacked Afghanistan and Iraq, 2002, 2003, our defense spending went up, and it's been on that imperial military spiral ever since. Let's go back to the pre-imperial war defense spending, you know, and let's be realistic about it. That's a much more acceptable approach toward defending the United States than giving Russia Europe.
Yeah, it's an interesting thought.
And letting down your guard on cyber war.
Yeah. Let's turn it back to, because we're getting very political,
Yeah.
and obviously it's a mining channel, so we probably reference it back to there somehow.
Someone said it, you know, someone criticized me for getting into politics in a gold speech recently, and somebody else in the audience said, if you don't want to talk about politics, you don't want to talk about gold.
No, in fairness, we've been talking about politics quite a lot today, because
Yeah.
I think you're right, it has a huge impact
Yeah.
on the gold space. But with everything that is going on, obviously, look, I think there are things that obviously could be changed that might have a more meaningful impact, like you're suggesting, but the cards are the cards. We're in a position that we're in. How are you reading it with the tariffs that have come in today? Obviously, like you're saying, there's no way of really knowing at the moment whether or not that's going to have an impact on gold, but just the uncertainty in general. We've seen the gold price start to pick up again today. Are you not? How are you sort of analysing the next couple of weeks, next couple of months, the next year in terms of how this plays out?
The guy on screen, that's me, Ken Conkin. I'm the president and CEO of Tudor Gold Corp. I co-discovered the Brucejack mine in Canada's Golden Triangle with my colleagues Joe Ofsnick and Ken McNaughton. And in 2021, Brucejack was purchased by Newcrest for $2.8 billion. We have reassembled the team, and we have made another significant discovery just 15 kilometers north of the Brucejack mine. The Goldstorm deposit today hosts approximately 28 million gold equivalent ounces, including close to 3 billion pounds of copper, making it one of the largest copper gold discoveries in the past 30 years. Initially, Goldstorm appeared to be a large-scale bulk tonnage target. However, recently we had a major breakthrough when we discovered a new complex carrying high-grade gold, hitting in excess of 20 grams per ton gold with intercepts of over 25 meters. Visible gold observed throughout the core suggests the possibility for excellent gold recoveries. Our next steps, it's all about high grade, and more high grade. We plan to expand and explore the potential of this new spectacular high grade gold system, which initially was one structure and is now four. The history of the Brucejack story seems to be repeating itself. We believe we are on the pathway to demonstrating another multi-billion-dollar project in the Triangle. We would be honored to have you follow the journey as we intensify our exploration efforts in 2025.
Right. Well, in terms of tariffs and other policies, really, you could say a couple things. The tariffs will be inflationary. Tariffs are by definition inflationary. You're taking money that would normally be in the supply and demand of goods and services in some cases between producers and consumers.
Yeah.
And you're taking that money and you're giving it to the government to finance a deficit spending.
Yeah.
So you're inflating the economy, and tariffs are also recessionary, no doubt about it. And as I said, you will see a reduction in growth and a rise in inflation. The big question is, what will the fiscal response of the government, the White House and the Congress, be And then what will the monetary response be to the tariffs, the higher inflation, the lower growth, and whatever the fiscal response is? And we really don't know what that fiscal response is going to be, because clearly the fiscal authorities don't know, because they keep talking about weird stuff. So they're talking about slashing $800 billion from Medicaid and other things like that. We don't know how that's all going to shake out. And we don't know if somebody will grow a spine and say, wait a second, this is ridiculous. Let's go back to a more rational type of thing. I saw that Johnson, the Speaker of the House, Johnson, actually said, I would like to set aside the budget cuts and just come up with a spending bill now through October. Let's get that done, because we can keep the government going and we can worry about spending cuts after that. That's a rational approach. That's the first rational thing he said ever in his life. I mean, the thing about riding dinosaurs and taking his daughter to the Virgin's ball, that's wow. This is the first rational thing he said. Let's see what happens with the fiscal response. And there, I really don't know how it's going to shake out. And then you have the monetary authorities who are saying, okay, now we don't know what the playing field is going to be. Do we fight inflation with higher interest rates? Do we fight recessionary controls with lower interest rates? And then there's the whole fiscal policy, which we have no idea what it's going to be. The Congressional Budget Office says you should expect that the debt will grow by $5 to $7 trillion over the next 4 years, following Trump's proposals, insofar as you can figure out what those proposals actually are. So that's going to affect gold. You've got this worldwide issue right now of heightened uncertainty and anxiety about what is going to happen politically and economically. The world is in a less certain time than at any time since December 1941. And people are buying gold and silver and US dollars and US treasuries hand over fist to protect themselves from whatever may come. So that means higher gold prices, higher silver prices, a stronger dollar, and less upward pressure on US treasuries.
In the outcome that you're talking about there, where it's an inflationary pressure because of the tariffs, obviously Trump doesn't have control over interest rates, the Fed does. Trump can't influence interest rates in the US. So the Fed's natural response usually is high inflation, higher interest rates. Is that not just what's going to play out?
Well, the Fed's charter is to try to balance its efforts to keep inflation down and employment up, or economic activity up. Keep us out of a recession insofar as possible, or keep us out of a recession that develops into a depression, and keep inflation down. So that's the Fed's job. The Fed works on interest rates only on the short end, right, with the Fed funds rate and short 90-day rates. The Treasury really controls the longer rates. And what you'll saw, I mean, if you go back, for decades we had 30-year Treasury bills. In the Clinton era, he took a $325 billion deficit that George H. Bush had, and he made it into a surplus. And he paid down $1 trillion in debt over 4 years. And the dollar soared, and interest rates plunged. And they actually they stopped selling 30-year Treasury bills. A couple of years ago, they started selling 30-year Treasury bills again. So you should expect an enormous flood of 20 and 30-year Treasury bonds and notes as a result of the increased spending that will come from the Trump efforts to reduce spending.
Okay.
Let me just give you an example. There's an agency, and starting with COVID, they've let people work remotely. A lot of people were in a very high-priced Washington, D.C. area. They moved home to Omaha or Denver or Santa Fe. If you look at the directive that has been given to these agencies, it's like, you have until a certain date in March to give us your plan. How are you going to deal with getting people to come back to the office? The agencies and departments have the right to do this. And I was talking to somebody in the U.S. government. He said, If we say we're going to let them stay there, it's no cost and no effort. If we say they have to come back to Washington, we have to pay their relocation costs. It's going to take months and years to do it, and it's going to cost billions of dollars to move our staff back into Washington.
Why do they need to pay relocation costs?
Because that's the law.
Is it really in the
Yeah.
US? Because if they had made the decision to go and move back to wherever,
Yeah.
that's
The rules,
their
the
problem.
rules are you can go work from home, wherever home is, but if we call you back, we pay your relocation costs, including housing differentials.
Oh, well, it's
Yeah.
but
Now,
again,
does Trump know that?
Well, I think as soon as he finds out, that's going to get ripped up, because it just seems a bit ridiculous, right? That you'd then pay everyone to come back to Washington. So surely they're either not coming back and they're not working, or
I think
or they're going to have to
the
make their own
U.S.
way back.
government's motto is "E pluribus ridiculous."
Mm.
Yeah.
Yeah.
So it's like military intelligence, or the State Department with foreign affairs and the Interior Department with the parks. Yeah.
So, something else that's obviously happened that's really topical is obviously we had a big blowout in the Oval Office on Friday. We then had a European summit in London more recently over the weekend. It seems like Starmer and Macron want to run point on not even negotiation, but on what the solution is going to be for Russia-Ukraine now. Can't see Trump taking that very well. Just referencing back to your uncertainty level, I mean, I think you're probably right. This is unprecedented. This is probably 80 years or so since anything like this has ever happened, right? So, how much of an influence does really this uncertainty now have on the gold price moving forward versus what has just been really central banks underlying buying gold?
It hasn't really been a lot of central bank underlying buying driving the gold price. It's mostly been investor demand. And we've seen very strong investment demand, and actually in the United States and the Americas, jewelry demand over the last year or two. So you've seen increased demand on an investment basis worldwide. I mean, if you go back to 2019, 2018, investment demand for physical gold globally was probably about 17, 18 million ounces. Last year, it was 32 million ounces. This year, it may top 40 million ounces. Investors around the world are buying physical gold out of those uncertainties. Central banks also have been buying gold, but central banks are different from private investors. Private investors, tend to chase the price higher. Central banks tend to be more price sensitive. They like to be value investors, but they don't think in terms of how many ounces of gold I want to buy. They think, I have monetary reserves of X dollars.
Yeah.
And how much of those monetary reserves do I want in gold, and how much do I want to buy? So a central bank 2 years ago that was saying, let me buy $2 million worth of gold, would buy 1,000 ounces of gold. Yeah. Today, he would buy about 600 ounces of gold. So you saw central banks buy half as much gold last year as they did in 2023 on a net basis, right? Central banks pulled back the number of ounces, but they were spending the same amount of money. They're continuing to diversify their portfolios, their monetary reserves, away from the euro primarily. You know, the dollar per portion of foreign exchange reserves has been relatively stable in the 58 to 62 range for decades, but euro reserves have gone from 29% to about 19%. They sold a third of their reserves in euros down. They increased their reserves in other currencies, and they've increased their reserves in gold. But as the gold price rises, they spend less. They spend the same amount of money, but they get fewer gold ounces of gold. Yeah. And in January, for the first, well, it wasn't the first time. In January, central bank gold purchases were negative, by which I mean central banks were net sellers of gold in January.
Is that selling still coming from Western countries and less so Eastern?
The selling came from Russia. Russia
Right.
sold 1.6 million ounces in January, and all of the other central banks bought about 800,000 ounces. So you had about 800,000 ounce net sale from the central bank area in January, and it was entirely due to the fact that Russia needed foreign exchange, so they had to sell 1.6 million ounces of gold.
Okay, is that a theme that you're expecting to see continue with Russia selling gold into the market?
Sometime this week, the Central Bank of Russia will release its February statement.
Yeah.
I was looking at it this morning and they hadn't yet.
Okay.
And we'll see what happens there. It's quite clear, they were actually selling quite a bit. They've been selling gold on and off since they started the war in Ukraine. They've been financing the war and the government with gold sales. And it's gotten more severe. So 1.6 million ounces was probably more than at any time since the beginning of sanctions against Russia. And it's going to be very critical to see what happens in February and March. There's a longer term issue which I should bring up. But one of the things that you see is that Trump basically threw them a lifeline.
Yeah.
They really have severe domestic, political, social, economic, financial issues.
Yep.
And they've been, it's falling apart. And a lot of oligarchs and a lot of Russian government officials, they won't say it because it's very painful if they do, but a lot of them are thinking that they should pull out of Ukraine and maybe find a new president. So there's a lot of dissension within Russia, and we have to wait and see how it is. Now the longer term problem is Russia has about 72 million ounces of gold. It used to have about 77, 78 million ounces, but over the course of the last 3 years during the war, they've sold off on a net basis about 5 or 6 million ounces of gold. But they still have 72 million ounces of gold. They're in really bad shape. If the EU and England work with Ukraine and continue to batter Russia, and they have the F-16s, they have the long-range missiles, and NATO said in the fourth quarter of last year, do with these what you will.
Yeah.
If they mount a serious counteroffense, because it is a counteroffense now, because Russia has started an offense in the last week or two to try to, convince the Ukrainian people they should capitulate. If Ukraine mounts a significant counteroffense, and Russia is in fact more seriously damaged on a long-term basis, it could have to sell a significant portion of the 72 million ounces. It's already sold, 5, 6 million ounces. That's not quite 10% of what they had at the start of the war. But you could see a lot of gold being sold by the Russian central bank in order to support the economy in a post-war bad scenario.
Yeah.
That could really hit the gold price on a worldwide basis.
Would the fact that the war's escalating even further, though, increase demand that would perhaps help support the price, even if Russia are selling into it, do you think?
If the war continues, it'll support gold prices, yeah, for sure.
Yeah. So even if Russia do, in theory, say, follow the same as last month, they do put a lot more gold into the market, the fact that they are doing that, in a sense, shows how desperate they are, and
exactly.
And therefore people should probably be a bit more concerned, because I think the more desperate that Russia become, the more the likelihood of things escalating further.
Usually a war is fought at your highest level of military sophistication.
Yeah.
And they tried last year, the first time the Russians tried to launch a missile to sort of show the world that they had these intercontinental ballistic missiles. The first time they tried last year, it blew up in the silo, which is a big embarrassment.
Yeah.
Putin got pissed off at the army, and everybody else got ticked off at the government for letting its nuclear arsenal deteriorate.
No.
So they did a second one, like in the third quarter, and they made sure that they didn't blow up in the silo to show it. But the reality is there that the country has a lot of problems.
Well, it's what happens when you let corruption run rife in a country and within the military, I'd assume.
Yeah.
Yeah. So obviously there's no crystal ball, but I guess to summarise, we're in such a volatile place at the moment, let alone tariffs and economic policy in the US. But I guess the line of sight of conflicts ending, which a week ago you could have said actually it looks like maybe we're going to see a minerals deal. We're going to, things potentially might calm down. That's now so far up in the air. We're sort of back to where we were a few weeks ago, where things are really uncertain, if not more so.
One of the interesting things is the United States is still part of NATO.
Yeah.
And if Russia attacks any part of NATO, NATO members are legally bound to defend that country. So if the EU and England want to support Ukraine and they do things that really push the Russian military, and the Russian military attacks Lithuania or Finland or Poland.
Can they do that though if they're struggling on the front line of Ukraine? Can they really?
If they're desperate, they might do it. But what that would do is would precipitate a NATO response.
Yeah.
And the United States hasn't quit NATO yet, so we would be legally bound to participate in that.
You say haven't quit NATO yet. Are you expecting them to quit?
No,
NATO?
I don't expect them to.
No, I wouldn't. No.
Yeah. I think we'll get a new government before we quit NATO.
Okay. Okay. Well, what are you looking out for over the next couple of months or so? What are the key indicators for you that?
So much. It's going to really come down to investment demand. It always comes down to investment demand. Central banks will be very important. I mentioned that Poland had bought a couple million ounces of gold and had it delivered into the New York Fed. They didn't want it in London. They wanted it as far away from Russia as possible. And that increase of 2 million ounces in the New York market led to the widening of the arbitrage, which led to all of the hypothecations that it was tariffs. But it wasn't. It started with stronger demand in the United States market in general, and then all of a sudden you had an extra 2 million ounces of demand for good delivery gold in New York from the Polish government and other Eastern European governments that are saying, no, we want our gold as far away from Russia as possible. So they'll continue to buy gold. Investors will probably continue to buy gold. If we see in the second and third quarter some normalization of investor anxieties toward the state of the political environment, let's say that some of the things that Trump's trying to do with his flood the zone backfire. And by the time you get into April, maybe people are saying, okay, maybe this isn't going to be as catastrophic as we feared it could be. You could see a period of time where the gold price plateaus. It could come down maybe 2,800, 2,700, but I don't think it comes down very far because the problems will still be there.
Yeah.
And that'll be seen as a buying opportunity. And central banks will buy more gold because the price is lower.
Yeah.
So it really comes down to that. So we're going to be paying a lot of attention to stock market, overall economy, economic leading indicators, inflation, Fed policies. We've seen, it's funny because people talk about de-dollarization. In 2023, investors, offshore investors, governments and others, bought 10.5% more gold or treasury bills than the year before. They increased their treasury holdings 10.5% to a record $8 trillion. In 2024, they increased their holdings 15% to something over 10, I guess that comes up to about $10 trillion. So, gold bugs talk about de-dollarization, but the reality is that investors around the world are racing to the dollar and to gold and to silver. And that's probably going to continue. So we're watching that kind of stuff.
Good. Okay. Well, Jeff, it'd be good to get an update another time, maybe in a couple of months as we know more.
I will still be around, I think.
Oh, I hope so. No, but Jeff, I appreciate it. Thank you.
You're welcome.